Roschelle, we got Ellie on the line here. What do you want to ask her?
When you're doing calls with your passive investors, what are the most important questions that you want to make sure you cover with them?
During the call, there are a few questions. Some of them are just to make sure that they're comfortable, that they're interested in multifamily, generally speaking. So the confused mind tends to say no. So making sure that A, that they're interested in real estate, and B, that they know how a syndication works, because many people still don't. That's going to be very crucial, because some of them are going to be embarrassed to tell you that they're not exactly sure how this whole thing, works.
Welcome to the Diary Apartment Investor Podcast. I'm your host, Brian Briscoe with Four Oaks Capital. Very excited for today's show. We have two amazing guests on the line with us. We have Ellie Perlman and Roschelle McCoy. So first off, Ellie, welcome to the show.
Hey, Brian, I'm really happy to be here today. Thank you for having me.
Yeah, thanks for coming on the show. I very much appreciate it, and super excited to hear more about you and learn a little bit more about you. So, that said, would you start us off by telling us about yourself?
Yeah, absolutely. I'm an operator, owner operator and a syndicator of multifamily. And I started my career back in around 2007, 2006. So very, very interesting time to get started in real estate. And at that time, I was not an investor just yet. I was a real estate attorney, lawyer, and learned a lot about how risky it is to take very aggressive debt, because I experienced that with my clients. And then after my legal journey in real estate, I switched to property management. I know it's not as exciting, perhaps, as being a lawyer, but I wanted to be closer to the real estate world and understand how it works. And after that, I made a transition, moved to the US from Israel and went to MIT and got my MBA degree. And not so long after graduation from grad school, I actually started Blue Lake Capital, which is the company that I manage today and owns over 400 million in asset under management.
Nice. Now, interesting, the jump from real estate attorney to property manager. Usually see people wanting to go the other direction. Was this part of the master plan? I mean, was your ultimate goal to become a syndicator and investor like you are now? Or was there something else that drove that?
I mean, there was a general plan of owning real estate. I wasn't sure exactly how to do it. I definitely did not plan to go to law school and then quit my job and become a property manager, but I normally don't follow, the path that many people take. And people raised their eyebrows and were kind of a little bit shocked, because you don't go to law school and then kind of, it looked like a step down from where I was, because it's not as prestigious. You don't make as much money. But I don't know. I really wanted to be part of the real estate world to understand how to handle tenants and how real estate actually works. So I took a chance, and I knew it was not going to be forever. And I said, hey, let's try it and see where it's going to lead me.
Yeah. Well, there's a lot of things here that I like, because you understand the real estate from an attorney's perspective. Okay. So you understand the whole legality of everything. Now you understand it from a property management perspective. You went to MIT, which, is kind of a big deal. I'm still upset at them because they didn't accept me 20 years ago. But so you have almost the picture perfect background to do what you're doing now, because you have a lot of experience in there. And I imagine that your little foray into property management has paid dividends many times over in what you're doing right now. So.
Yeah, it was interesting the way that that it happened. And I think if you can have the best education in the world and the best experience, if you're not truly passionate about that, about real estate or anything else that you do for that matter, you're going to be burnt out, and you would want out. So there has to be that desire. And even after I graduated from MIT, I wasn't sure. I knew I would want to be an investor. I wanted to be an investor, but I wasn't sure is it fix and flips? Is it, is that the path to go? Should I buy single family homes and rent them one after another? Or should it be, multifamily or retail or any other? There were so many options.
Mhm.
And this is where I use my education, and I understood, if I want to scale, I know how to scale companies because that's what I've learned to do. And I realized that buying one asset after another, if it's one door at a time, it's going to take me so much more time to scale. Finding home, single family homes, negotiating the price,
Yeah.
managing it takes, I'm not going to say that it's as hard or as easy as finding multifamily property, but you still need to put time into buying one asset after the other. And I did I reverse engineer the time it's going to take me to get to a certain amount of doors that I wanted to get to. And I realized that that's not going to be the way. So I understood I needed to go big and start buying multifamily. And I've never actually bought a rental property, just one door. I think the smallest asset I've ever owned was 28 units. That was one of my first assets. And probably the biggest one is 1,032 units. So that was the range. So, and again, I decided to take, it was a leap of faith, and I decided to bet on myself and take the risk. And again, other people looked at me and said, "Oh, you're starting big. You should start with one door. You should learn how to do it, and then slowly go and graduate, quote unquote, to multifamily." And I just thought that's not my way.
Yeah. And I realized that as well. And it's interesting, all the things that went through your head that you were just talking about. I had the same questions. I always wanted to be involved in real estate. I did dabble in single family, and I did start looking at the fourplexes and the eightplexes and whatnot. But I was active duty for 20 years and just retired. But the whole time, I think part of the reason I went 20 years active duty was because I couldn't figure out how to get into real estate. I couldn't figure out exactly what I wanted to do. I couldn't figure out how to take that next step. But when I finally did, it was magical. But so how did you, so going from property manager, how did Blue Lake start? And was that your first company doing syndications, or did you have something in between?
Yeah, Blue Lake was the first company that I started that actually started buying real estate, sourcing deals, basically reach out to investors and get, raise capital and invest. After I've done property management, I realized, hey, I actually don't know much about running a business. And I understood right away that if I wanted to build and scale a company, I have to treat it like a business. And I said, hey, the best place to buy real estate is the United States. And I remember learning back in Israel about the concept of the self-made man. And I said, that's perfect. I'm going to be a self-made woman. I'm going to move there. And I said also, I needed a place that is going to give me the business education that I'm lacking, learning how to read, financial reports beyond what I've learned as a property manager, learning how to start companies, learning how to find investors, how to deal with investors. And all of that I basically learned at MIT. And that knowledge I actually implemented towards building Blue Lake. But Blue Lake, that, to your question, that was the first company that I've started that actually, bought real estate.
Yeah. And what were some of the challenges you faced, with the first couple of deals that you did with Blue Lake?
I think one of them is one of the challenges is something that a challenge that I hear a lot of young syndicators having to deal with, which is kind of the chicken and the egg. You don't have experience. What broker is going to want to work with you, and what seller is going to want to take a chance with you. But if nobody's going to give you the first deal, how are you going to get that experience?
Yeah.
And the thing is that brokers can smell sometimes inexperience. If you're inexperienced, they can smell it. It's the way you speak, it's the words you choose. If you're not using the right lingo, if you're not confident enough, and they don't want to take the chance, because if they're not 100% sure that you can execute and close the deal, then they're not going to recommend you to the seller and having a deal falling through the cracks, that's the, not even falling through the cracks, just falling, just not being executed. That's the worst thing that can happen to them.
Yeah,
because
absolutely.
they can lose the deal.
Yeah,
So
it's their
that's one
reputation
of the
too.
challenges. Yeah,
Yeah.
absolutely.
Yeah, absolutely. Yeah, it's a big conundrum. It's
Yeah.
I reflect on it often. You have to have experience to get experience. And it's kind of like I said, the chicken and egg. Which comes first. You kind of, yeah. I think that's a lot. I think a lot of people have to navigate. How did you crack that egg?
So there are multiple ways to do it. I would say the main way is, and you of course can start. I've seen syndicators, young syndicators, basically bypass that hurdle in different strategies. One is to say, okay, I'm just going to buy 10 units, 12 units, something small enough that the brokers are many times not, they're more flexible when it comes to who they're selling it to. And the sellers are mostly not the sophisticated, big companies, big syndicators or institutionals that are very picky about their buyer. So you can go that way and then get your, it's easier to get 9 units than it is to get 200 units. But for those who wanted to scale, and that's basically what I've done, I said, okay, I want to start buying large properties, but no one in his right mind is going to give me an asset. So I can rely on someone else's experience. And there are multiple ways to do that. You can find a sponsor that has a deal and find a way to contribute to give some value to that sponsor, or you can partner with someone that already has the experience and say, hey, why don't we partner up? I'm going to do all the work. You can maybe loan me, quote unquote, your balance sheet, maybe sign the loan. Maybe some investors that you can bring to the table. And when they're talking to the broker, they're presenting it as as a partnership. And so the partnership has experience, or the partner has experience. And that way your lack of experience is just not relevant. Now, it's easy said than done. It takes a lot of practice, but it's definitely, doable.
Yeah. We went the second route where we brought somebody with experience onto our team, and it made a whole lot of difference. It really did. Once we were able to bank on that experience, now our group had 3,000 doors instead of 0, and they all belong to one person. But we didn't have to say that. But end of the day, I think the way to crack the nut, I think I said crack the egg earlier. I just made up that term. I guess it's going to be the new hit term around the world. But the way we cracked that nut was just how you said at the end time, the second time as well, is find somebody who's experienced. You find your deal, you roll with it, and get them to partner with you. So something I want to ask you about is, you went from, I think you said 28 units was one of your first ones, to the 1,000. What was that like going up from the smaller stuff to the really, really big stuff, and what were your big challenges there?
It actually doesn't matter. The 28 units and the 1,000. I mean, it's the same amount of due diligence. The same. You run the numbers. The model doesn't care if it's 28 or 2,800 units. The only difference was just needing to raise more money. So as the deal, obviously, as the deal is larger, you need to raise. You need to bring a bigger check. I mean, I think it was pretty natural. I think, progression from the 28 units was bought alongside with 100 units that was nearby. So that was, 100, we manage it as 128 units, but then, there's a 250 and, and it grows from there, 400, 500. It's really the same. 250 units or 500, everything is exactly the same, with the exception of, okay, the capital is the only difference. Can you bring 8 or 9 million versus 25 million? Can you do that? Can you make that jump? That's the only difference between them. I would say actually the second difference is you're going to be talking with kind of the high caliber broker because they're managing the larger deals. When you're looking at 50, 80, $100 million deals, you are competing with different buyers. So you're not competing with, small syndicators or maybe a doctor that has the clinic and has $10 million to put as a down payment and he can buy a $30 million deal. You're dealing with companies that have processes, that have a lot of capital. So you need to understand who you're competing against, what's your strengths and what are your weaknesses. So one of your strengths can be, hey, we're still small and nimble. We're competing for the same deals that larger companies compete with and institutional buyers compete. We compete with them, but it takes them 60 to 90 days to close because they have committees and they need to approve everything. We can do it in 45 days, 40 days, 35 days. They can't do it. So understanding who you're competing with, that's going to give you that's going to give you the advantage you need. If you're looking at the 20 to $30 million, the smaller deals, then maybe the other sponsors can also execute quickly because their companies are also small, but maybe you have a much stronger balance sheet. Maybe you can put $1 million hard as a non-refundable down payment and they are not as liquid. So this is where you're going to shine. And on the larger deals, on the $100 million deals, someone can put $3 million, not even blink because they have a lot of equity. So this is not going to be your strength. So I would say between the two type of, the size of the deal, you need to understand who's the other buyers, what their strengths and weaknesses, and play to your strengths.
Love it. I love it. Yeah, a lot of good information there, and incidentally, that was a very self-serving question because we're trying to go from the $8 to $10 million purchase prices to the $20 to $40 million purchase prices. But absolutely love that. So we're going to switch gears slightly here, Ellie, and I want to ask you about your why. Your big burning why, as I like to say it. What's your motivation for doing this?
I'm going to try and make it short, but basically, I grew up very, very poor. So to get to where I am today, my why was to never experience what I've experienced as a kid. And, when you're the poorest kid in class and they make fun of you, when you grow up and you don't really have enough money to pay rent, or, you need to borrow money to go buy groceries, that's a tough place. And I knew I didn't want to stay in that place. So that was my why to get to where I am. And I thought, okay, if I'm going to be, I always knew I wanted to buy real estate, but I thought I needed a lot of money to do it. And I said, okay, you know what? I can become a real estate lawyer and get close to that because, I can still take loans and pay, for college and grad school. So that was my why until that moment. Right now, my why is definitely taking care of my immediate family. And making sure that the people that I care about, that they're going to be taken care of. And that's the most important thing. That's the thing that helps me deal with a lot of things that happen, because when you run a company, things happen all the time. In real estate, things happen all the time. There's always things that are that you don't expect. And reality is 100% is not going to happen based on what you underwrote before you bought the deal. There's always going to be things that are going to happen. And it can take an emotional toll on you. And reminding myself of my why, that's very helpful. And I think another part of the why is the desire to create, to build a company, to grow the company, the satisfaction that comes with it. Because at some point, okay, you have enough money to help whomever you want to help. You have enough money to set you up for life. And so why do you keep doing it? Why do all the most, successful people that we know from the media, why do they go to work every day? They don't have to. They have enough for generations, and so there's something at some point. At the beginning, it's always because of the money when you're coming from lack of, and at some point it switches, and there's something inside of you that is just pushing you to create, to build, to move forward, because that is very satisfying.
Yeah. I think it's about potential too. I think everybody has this innate desire to reach their potential, and I think that's what you're looking for. You see what can I eventually do? How much good can I do? How much can I create? What's my limit? hopefully you find that you don't have a leaky fund, growing and growing and growing. But so last question for you before we bring Roschelle on, what's next for you?
We recently launched fund, the $100 million fund we call Rev Fund. And the goal is really to allow investors to invest across multiple assets, multiple portfolios and markets. Because the thinking is when and if the economy, switches, different markets are going to behave differently. And we've noticed that the best properties, the best investments that performed the best were those with multiple assets in them. So that was the goal behind starting, Rev Fund. And so that's a very exciting fund that we're working on, and we keep purchasing assets and adding the assets to the fund. And there's a lot of demand from investors. So that was surprising to us, because we were not sure when we launched it whether investors would like to know exactly which asset they're going to invest in, or if there's going to be any interest in a fund. And we said, hey, let's take a chance. It was extremely expensive to start it, and we said, let's take a chance and see what happens. And the demand was actually overwhelming. So that's the next thing that that I'm focused on right now. Our fund, our multifamily fund.
I'll tell you, I just started investing passively a lot more than before, and I pick operators. I do not pick properties. I pick operators. And I've realized that it's not the property that makes the money, it's the operator that makes the money. And I think that's what your investors are doing, is they've picked you as the operator, and they trust you that you're going to pick the right property, you're going to get the right property under contract, you're going to manage it properly. So
that's a good point.
And yeah, I say this a lot. Anybody can put numbers on a pitch deck. Anybody can make a pitch deck look really, really well. It's the operation that's going to bring the returns. So anyway, that's I'm guessing that's a large part of your success, is your reputation, or the success of the fund is your pre-existing reputation and people banking on your reputation on that one. So good luck with that. And how can people find out more about that fund?
So if you basically Google my name, Ellie Perlman, or go to my website, ellieperlman.com, then you can read. There's a lot of information there. There's, if I'm not mistaken, we added the our latest performance report and all the previous assets that we bought and sold, and there's information there on Rev Fund as well. So that would probably be the best way to read more about the fund. And there's an area on the website where you can leave your information to set up a call with me personally to discuss investing, and that's about it. It's very straightforward.
All right, sounds good. We'll put that information in the show notes for anybody who's interested. Switching gears again, we're going to bring Roschelle on the line. So Roschelle, welcome.
Thanks for having me, Brian. Good to be with you, Ellie.
So Roschelle, do us a favor and tell us about you now. Tell us where you're from, what you're doing, and why you're in multifamily.
Sure, absolutely. So I've got a 20-year career in business and marketing. And I still have a full-time W-2 today. I decided a few years ago to pivot into real estate and kind of feel it out and see what it was all about. My husband and I, we've been married for over 20 years, and we've always talked about owning real estate, having some rental properties, and we just never really took action. So 5 years ago, we officially made the decision that we were going to move forward with it, and have since then bought 3 fourplexes, a single family, and a condo. So we've got a nice small portfolio here local to us where we live in central Illinois. And now we're pivoting once again and looking to multifamily.
Nice. So you say 3 fourplexes. So you got 15 or so rental properties right now.
Yep.
All right, nice. Yeah. So how is that? How are those performed so far? Doing okay, or what have you learned from that?
They're doing okay. You quickly learn when you have the small properties that, they, just like Ellie discovered, they don't always grow and scale at the pace at which you want them to. So, at the end of each year, you look at your profit and loss statement and you're like, oh, well, it looks like we made all this money in revenue, but, we put so much back into the property, or, you have a vacancy or whatever that may be, one major repair, and it literally wipes out your profits for the entire year. So that's where I really thought there has to be a better way. I know there's lots of people making money in real estate, and I want to figure out, what path they're on that I'm not, and see if it'll work for me.
Nice, nice. Yeah, and like I said, I had a handful of single family properties, and I found the same thing. Month over month, it looks like you're making money, and then the furnace goes out. And it's like, oh, there went a year's worth of profits.
Right.
And same thing. I have definitely found with multifamily, I'm sure Ellie can say the same, is when you scale, those expenses tend to be smaller portion of the revenue. So you're able to take it in stride, and the one or two vacancies, they're going to happen, and it's not that big of a deal anymore. So Roschelle, same question that I ask everybody on the podcast: what is your big burning why?
About 5 or 6 years ago, when I started looking into real estate, I was in a position with my current employer that the job I was in was completely eliminated. So one day our positions were, valuable, and we were helping our company meet its strategic objectives. And then the next day, not just gone. The jobs were gone. And so thankfully there's 4 other people with myself in that same job. Thankfully we were shifted into a different job immediately. So none of us were unemployed, but it was a much less desirable job. It was not the career path that I wanted for myself. And so that was really my eye opener to say, I have to have a backup plan. The company I work for is in industries that are very, very cyclical. So I had seen, we have a lot of ups and downs and a lot of layoffs over the years that I worked there. And I've seen it happen to other people at my company time and time again. It had just never been me. And so when it finally came, the ball kind of rolled down the hill and it was me, I just realized I had to have a backup plan in some other way to be able to support my family if the next time that happened, or, if there was a next time I truly was unemployed. I just needed to have another source of income coming in.
Yeah. So you find that multifamily is going to give you the stability that the the W-2 job may not in cases of cyclical nature. Yeah, I love it. It's
something you have more control over for sure versus
absolutely
just going to a job every day and expecting to stay employed. You can be a great employee and you can do quality work, but there's just no guarantee there. And so I just want to be more in control of my future.
Yeah, I love it. Well, here comes my favorite part of the show. Roschelle, we got Ellie on the line here. What do you want to ask her?
Sure. So Ellie, I'm excited to be talking to you today. I've heard you speak at a couple different conferences, so really happy that we get to have a one-on-one conversation. I know you've got a lot of experience with capital raising, as we've already talked about today. So I've centered my questions around raising capital. I've currently got a 40 unit under contract, and that is one of the roles I'm playing on the team, is the capital raiser. So really where my head's at these days is figuring out how do I do that well, and how do I grow and scale that particular part of my multifamily journey. So that said, the first question I have for you is, when you're doing calls with your passive investors, what are the most important questions that you want to make sure you cover with them?
Well, first of all, congratulations on the deal. That's exciting.
Thank you.
During the call, I would say the most important, there are a few questions. Some of them are just to make sure that they're comfortable, that they're interested in multifamily, generally speaking, because you can reach out to people in your network and, spend time talking with them just to learn, oh, I'm not into real estate, or I don't know, how does the syndication work again? And so the confused mind tends to say no. So making sure that they know, A, that they're interested in real estate, and B, that they know how a syndication works, because many people still don't. That's going to be very crucial, because some of them are going to be embarrassed to tell you that they're not exactly sure how this whole thing, works. And, that's, I would say, just ask a qualifying question such as, have you ever, invested in a syndication, or do you want me to go over the basics of how it works and kind of explain that? It doesn't have to be more than a few minutes, but make sure that they understand the fundamentals, because if the answer is no to those questions, are you interested in real estate and do you know how syndication works, the whole process works, they're never going to say yes to an investment. That should be the third question. Are you interested in this deal? And it's not how I would ask it, but many times I ask them, what's important to you in an investment? What are the returns that you're targeting? Sometimes they're not. Surprisingly, many investors say, I don't really target certain, return in terms of cash on cash or IRR. It's, you know, most of them are open to almost any market within the US. And it's like Brian said, it's more about vetting the sponsor. So another tip for, that I can give you is to make sure they know a lot about you. If you put information about you on the website, and make sure it's not just about the deal, because they can read about it. It's more about they're testing to see how interested they are in and how much they trust you. So I hope that answered your question.
Yeah, that did.
Ellie mentioned one of my favorite questions, which is, what are you looking for in an investment? All right. And I love that question because number one, it helps you on the back end to explain more about your investment. So that's one of the questions I start with. After formalities, tell me about yourself. What are you looking for in an investment in general? And they'll start. Some people don't have a philosophy, but others do. And when they say this is what I'm looking for, the great part about that is what they're looking for, and you can tell if your deal's right for them. And you can say, and have the courage if the deal's not right for them to say this deal's probably not right for you. You'll be amazed at how many people will tell you, yes, it is right for me. But anyway, that's beside the point. That's my favorite question, just because it gets them talking about what they want and they need. And that helps you later on determine what you need to talk about your deal to sell it.
Absolutely. I love that. And yeah, sometimes it's hard getting the conversation started, but what I found with the investors I've talked with thus far is once you give them an opportunity to speak about, what it is they're looking for, what it is they're interested in, usually they keep the conversation going and probably reveal a lot of the questions you were going to ask anyway. You just kind of let them lead the conversation a little bit in that type of way. So I like that. All right, so my next question for you is, what communication channels or methods do you find the most successful in reaching prospective investors?
That's an interesting question, because the first deal that I had, before I did my first deal, I was putting information on social media. So I kind of switched, I flipped the model where, instead of going and finding investors, because I started here, all my network was basically in Israel. And to be honest with you, most of them were unable to invest anyhow. And so coming to a new country and graduating from grad school, most, or maybe not most, but some of my classmates still had, very high student loans, and they were not in a position to invest also. So I had to figure out a way to have investors that did not have friends and family to reach out to and say, hey, this is what I do now. Are you interested? So I actually flipped the script and put content out there about real estate investing, and had an area on my website where investors can leave information to asking to schedule a call with me. And at that point, you're in a very different position because they're reaching out to you. You're not reaching out to them, which means that they've already vetted you. They're interested in real estate, and they know how syndication works for the most part because they've done their research. So the conversation was, about my experience, the type of assets I'm looking for. So, that's basically how I did it. I think if you already have a deal, I would say 9 out of 10 new syndicators reach out to friends and family. And it's a little bit tricky because many times investors, they need to get used to the fact that you're doing this. So you came from real estate already. You already ran properties, which is great because many syndicators start from an unrelated, they have an unrelated background. That's a little bit harder to process. So that's the story is very a natural progression, progress from buying, single family homes, small multifamilies to the larger multifamilies. So it actually makes sense. And that's your track record. And that's great because investors can basically, rely on that track record.
Awesome. Yeah. Cool.
Yeah, the only thing else, I mean, just double down on that. Your background. Focus on your background that applies to multifamily, and you'll find it a lot easier to jump in. And from what Ellie said, I come from the military to multifamily. I don't know how far apart two professions can be, but end of the day, focus on your successes and use those successes to build your reputation with people.
Yeah, I really like that because now that you say that, I've got some educational content on my website. Not a lot. I just launched it a couple months ago, so it's pretty slim right now, but it's, you build it over time. But one of the gaps I see after speaking with you is that I really don't talk about my background a whole lot. I've got a bio, which is, a couple paragraphs. It's pretty short, but I think some additional content around my why and my experience and that I think would be a good addition to the content already on my website. So thank you.
Absolutely.
I would say take a page out of Ellie's book too. Look at her webpage. She's got her story on there, and a lot of people will look at her story and a lot of people will look at your story and it'll resonate with them. I think what you told us earlier about your employment issue where, very cyclical in nature, and you've seen a lot of people laid off. You've seen a lot of, people lose jobs and whatnot, and your own change, that's going to resonate with a lot of people. And using the fact that multifamily can mitigate that risk is something that a lot of people are going to say, I've seen people in my industry have the same problem. I've seen people in my company with the same problem. I want to do what she's doing.
Yeah. And I would like to echo Brian's, words, because many investors, when I ask what's your goal, why, what's important to you in investment, but also what's your goal? Why do you want to invest with a syndicator? Many investors say, hey, I have a great job, it pays well, but I don't want to work until retirement. I want to start building my portfolio so I can create enough steady cash flow that at some point, way before retirement age, I'm able to quit my job. So a story about how your W-2 job was unreliable and you wanted, to find something that is more satisfying and to live life on your terms. A lot of investors will find that very interesting, and they can, I think it's going to speak to a lot of them. And that's your story. And that's a story that, a lot of them it's going to really help them look at you and say, oh, she's done what I want to do. I actually want to, I want to have my enough income to not be dependent on my W-2 job. So that will resonate with a lot of them.
I love that. Okay, so I'm going to go to my next question.
Yeah.
If you could go back in time to when you started capital raising, is there anything you would change based on what you've learned now that you're more experienced?
No. That's always my answer. If I would change anything, I would never
That's
change
incredible.
I want to, I've made mistakes. I can share the mistakes that I've made, but I had to go through those mistakes to be where I am today and to be who I am. So maybe I can share a couple of mistakes I've done. Let me think. Probably starting to buy a bit earlier, because I thought, okay, because I was putting content out there and I was raising money 6 to 8 months before I actually had the first deal, because I wanted to make sure, the lawyer in me wanted to make sure that this is safe and that you have enough investors in a pipeline ready to invest before you commit to something you may not know how to do. And I think, or not be able to do. And many people, I've noticed that they have to understand how to do something before they commit. And they want to know that they're 90 or 100% certain that they can execute on something before they take that step. And many, many successful people that I've learned, and I'm learning them because I want to learn how they did what they did and to get inspiration and tips from them. A lot of them just figured things out as they were, walking through a certain path. It was a risk that they took and they were willing to take it, and they didn't wait to learn everything, to know everything, to feel safe before they jumped into it. So one of the things, that I think was my mistakes was basically to wait instead of jumping. And I would have been fine, but I wanted to make sure that there's enough investors, that I could close the deal. That's one of the mistakes that I've done, but I'm glad that I took the time to do it, because now I remember that, how I felt back then. And that helps me take more risks and say, hey, you could have done it differently. So that gives me the inspiration to take more calculated risks and understand, that I'll figure it out. I'll do it. And it's been very helpful, when, in growing my company.
Yeah. And I've discovered that in this journey that, you don't always know what the next step is, but you keep putting one foot in front of the other, and the path will lay itself out for you. So you just have to have faith that, faith to keep going, basically.
Absolutely.
Yeah. I'll just say, for me, I was afraid. I mean, it's hard to say that, but that was the actual word. I was afraid of what people would think. I was afraid if I called people up and said, hey, I'm an apartment investor now, this is what I'm doing, even before we had our first deal under contract, I was afraid of later not doing what I told everybody I was going to do. So I didn't talk to a lot of people about it because of that fear. I think that fear held me back a lot on that first capital raise, because I ended up woefully underprepared, the opposite of Ellie, woefully underprepared to raise capital, because I was afraid of talking to people about it. And then once I had my first deal, I was very happy to talk about it, because we had something under contract and it was like, this is it, we're going to close, this is, but I just say, don't let fear hold you back. Pick up the phone, call people, email people, text people, and let people know what you're doing. You'll have a certain amount of success from your website, but and people can go to the website, learn more about you, and that's a good place to refer them to once you do talk to them. But don't be like me, where you're too afraid, too worried about a potential future failure to talk to people about it now.
Awesome. I love that, for sure.
We got time for one more quick question, if you got one.
I do. Yes.
Awesome.
So Ellie, what is your capital raising superpower?
I don't think of myself as someone that, I don't think I have superpowers, but I think being very vulnerable and open with, and raising money does not stop when you close the deal. When you manage the deal, you're also raising money, because investors are going to look at, how you're communicating. If when things go wrong, and things will go wrong because it's real estate, whether you're communicating that or you're trying to mask it. And that will make their decision whether to invest with you again, whether to bring their brothers, sisters, friends, colleagues. And so I think just being very open, and when things go wrong, for instance, just to communicate that and not be afraid of the repercussions. So for instance, when we bought an asset, when we put it on the contract, it was 98% occupied. About 4 or 5 days before closing, we realized that the seller was not managing the property well, and the occupancy dropped to 82%. So we were not even eligible to get the loan, because you have to be stabilized, meaning 90% occupied for 90 days to be eligible to get, a Fannie or Freddie loan. And it was painful, but being open with investors and say, hey, dear investors, this is what's happening. This is why. And this is how we're going to fix it. And if you still want in, that's great. If not, just let me know, because I understand it's not the deal you signed up for. And not even one investor wanted out. And that's because when you're communicating, they trust you, because they know things are not always going to go as planned. That's why you're being compensated, because you're willing to take a risk. But if they know that when things are going to go, when things are not going as planned, you're going to be upfront with them. It means that they can trust you. So they're going to be more likely to invest and they feel comfortable investing with you. So I think just being, open with my life story, and also open with what's going on with the properties, that's something that I keep, I want to tell them the good, bad, and ugly. And so far it's been working well. So if this is a superpower, I don't know, but
Yeah, open and honest. I've had people tell me that I'm honest to a fault, and maybe too honest on certain things, but it has, people respect that, and they know that they're going to get a straight answer from you. And Ellie, I do think that is absolutely a superpower, so anyway, we are about out of time. So one question for both of you. Ellie, you go first. how can listeners learn more about you?
So listeners can basically Google ellieperlman.com, and that's my website. That's where they can read about me and about the company's performance. So Ellie is ELLIE, and so Ellie Perlman in one word.com. That's how they can reach out to me.
Super simple. Oh, and you also have a podcast that I think is an amazing podcast, Ready to Scale. So that's somewhere else where people can learn more about you. So we'll put links to the website, put links to the podcast in the show notes. Anybody who's interested, go check her out. Roschelle, same question for you. How can listeners learn more about you?
My website is investtitanium.com. So my brand is Titanium Investments. That's probably the easiest way to find me. You can look me up on LinkedIn, Instagram, and Facebook. I've got company pages on all of those different platforms. You can also search for me by name. My first name's a little tricky with the spelling, but Titanium Investments is probably a little easier way to find me.
All right, we'll make sure we spell your name right in the show notes so people can Google you properly. But
awesome. Thanks.
Good enough. Well, thank you two so much for coming on today's show. I appreciate your time, and I think this was a really, really good episode.
Awesome.
Thank you, Brian.